Well, indices have many use cases, but can largely be grouped into two broad categories. One, to measure or attribute portfolio returns. For example, am I outperforming or underperforming the S&P 500? Or put differently, to benchmark investment return. Two, and this is probably the more familiar use case for most, as the tool to access and replicate the risk and return characteristics of a particular exposure through a basket of securities or an investment vehicle that holds a basket of securities. For example, if I want to get exposure to the economy of China, what stock should I buy and by how much? If I want to access a specific sector of the US market, like healthcare or technology, what are the names and weights I should hold, and what sector indices should I replicate? What if I believe US companies of smaller size tend to outperform larger companies? Is there a small cap index that I can replicate? Well, the answer is yes. You can look at Russell 2000, for instance. What about asset class exposure? For instance, if I think commodities are a great inflation hedge, particularly in today's environment, can I replicate the risk and return characteristics of broad commodity exposure? The answer is also yes, because there are a few indices to choose from where you can buy commodity futures to replicate the index exposure. As a leading private marketplace, Forge set out to use all the data and trading expertise at its disposal to create the Forge Private Market Index as a benchmark and as a source of information for investors to use in analyzing and making decisions in the private market.